like to invite Priya Murali, VP Taxation from Bayer CropScience Limited. Please welcome her on stage with a huge round of applause.
So thanks a lot, actually to this forum for asking me to speak on a topic which is very dear to me, that is on M&A. And it's also an additional pleasure to talk to you because we have eminent speakers here, and also we have a group of professionals who are specialists in taxation or in the sense in finance. So thanks a lot for that. M&A is a very close topic to me because it has got a lot of interaction with the other parts of the organization, whether it is finance, accounting, IT, legal, and also business, So you have a lot of interaction, so it is not something which you are sitting in a corner and doing a work, but it is much more than that. Yeah. So I have been asked to speak about M&A and the complexities. The way how I have set up the presentation is to give you a little bit of what is M&A. Of course, most of you know it, but still I thought it is a good idea to listen, just speak about it. And then we will get into the topic of what are the important requirement, which is a and this is actually requisite, what will happen for the what has to be done if you want to do this M&A. And after that we will get into the process of M&A, and then we will also see what are the post M&A requirements. Yeah. So why are we talking about M&A, and why it is such an important topic? Because if you look at 2024, we have had so many M&A already. We have had Coforge, which is basically into cloud computing, and in the sense, it is actually that, as well as Sangi, which is a Signity, which is basically into the sense IP as well as AI, merging. You have this entire Ambuja Cements, as well as in the sense you also have actually Ultratech, this merging, which is basically into the space of cements. They are actually all of them are coming together. We have Gujarat Gas and Gujarat State Petro. Very interesting topic is Zepto, which has merged, which is an international. Zepto was an international organization which was in Singapore, and that got merged with an Indian company because they wanted to have ease of business. They wanted very little global issues or compliance issues. Yeah. So we have all these things, and then we also have demergers. We have Vedanta, which is into various kind of segments like oil and gas, ferrous metals, aluminium. These are all breaking together into different companies. Then we also have Tata Motors. Some of the people are here. I can see them. Which is again breaking into commercial vehicle and the passenger vehicle. So you have this entire slew of M&As that is coming together. So typically in a merger, what happens is, what is the key element in a merger is that it has to be for a synergy. It has to be because you want to do a backward integration, or it has to be something which is to come together. Yeah. And when it comes to a demerger, it is because you want to focus on specific areas of business, and you want to sort of reward the shareholders appropriately. It could also be this is because you have a financing structure which suits you, because every business has a different financing cycle, and you want to use it appropriately. So these are the this basic reason why you do the merger. Most of the mergers are tax neutrally, means already aware of that. It is for business consideration synergies, and it also means enables ease of doing businesses. But the most important tool here is a tax. Many people say that a merger is done for tax purposes, to absorb the losses. You need to very clearly understand that that's only a byproduct, and you need to have this principal purpose test that many of our speakers have spoken about. That is the most important thing, because very important is to have in your NCLT documentation that your purpose of merging is for business reason and it is not for tax reason, and this is extremely important. Now there are various type of mergers. You have an upstream merger, which is basically a subsidiary merging into the parent. Then you have a downstream parent merging into subsidiary like Zepto. We have a horizontal merger where companies in the same industry want to merge because they want to have a market access or something like that. Then we have a conglomerate merger, where merger of totally different companies, they come together. And we have a cross border merger, and then we have also have acquisitions of of specific products only. It is really not a merger, but it is specific product acquisition which also happens. And yeah, on this and the mirror image of that is a hive off, and then of course we have the demerger. So these are the various list of mergers or demergers that we look at. So what I will be talking about is basically my experience and the practical experiences and the issues that we face for merger processes. Yeah, that is what we will be basically discussing. Possibly we can have this presentation for about 15 to 16 minutes, and then maybe some questions if you have, I am very happy to answer that. So the most important aspect is the due diligence that happens, and this is required only where these are totally in the sense say arm's length companies. If it is a related party, typically due diligence is not needed, mainly because you know the other company pretty well, right. So yeah, in a due diligence what is important is to give the tax information like the tax assets, tax liabilities that you have, and and then very important also is your contingent liabilities. To assess what is the nature of your contingent liability, because that information actually goes into the valuation of both the companies. So very important for you is to sort of assess that already much before the merger takes place, so that you know what it will entail. Especially if you are an acquirer, it is very important that you assess that and then put a value to it, because that will depend, this is actually your swap ratio, everything can change if your contingent contingent liability position or your asset liability position of taxes changes. Yeah. Then we get into the structuring part. Now all this is pre-merger. Yeah. So we already have to imagine a lot before we actually get into the merger process. You need to decide together with your acquirer, which is so the most important thing here is to talk to your acquirer. That is the most important thing. And when it comes to due diligence, it is also important for us tax guys to understand the business reasons why this merger is taking place, because a business reason normally is the most important reason, and tax cannot drive the business. Yeah. So sometimes we say no, this is a tax issue, and then there is a litigation, we cannot do that, we are losing a lot of taxes. But if you understand the business reason, and if that is paramount, then that is a different story. But if the tax reasons or the tax contingencies outweigh the business advantages, it is also very important for you to show the red flag and tell the person who is acquiring it that there is a problem in the in the acquiring company. Yeah, that is important. In the structuring we have got asset deal, share deal, slump sale, or it could be a product sale. In all these things, the most important thing is that 194Q, which is a very small amount, which is only 0.1%, but most of this will have a 194Q, and it is very important for you to inform your acquirer that this compliance needs to be done, because sometimes we tend to forget it in the larger scheme of things. The type of assets, you need to know what are the type of assets that are there for offer. Yeah. Now if it is an acquisition of an asset, you need to know what is it that you are acquiring and where is it really situated. Is it overseas? Is it in India? Whether it is a trademark, whether it is a know-how, whether it is a marketing authorization, or a customer list, regulatory approvals. So it is very important to understand which assets lie where. You cannot get into a M&A deal, especially the tax guy, with a confused understanding of where the assets are, because that is primary. Yeah, that is how actually that is the starting point. Yeah. Then you also need to evaluate the tax losses, whether they are available or not, because you need to have definitely 51%. Yeah, that is very important. But mind you, you cannot do this evergreening anymore, because this our budget now, because what typically people do is you have a loss and you try to do a merger, and then you say that yes, you have got another 8 years to take advantage of the loss, because it starts all over again. Now that the government has nicely smartly capped it and say no, you cannot do that. So that is something you should be very mindful of. Then of course we have the GST receivable situation. You need to see whether the GST that is there accumulated in the merging company, whether the merged entity will be able to take advantage of that completely, because if you have a business which is an exempted business, there is a certain ratio that is applied. As a result of this, you will not be able to take advantage of the GST credits in the merging entity, and therefore that is also another aspect you need to be very certain about, whether you will be able to get it or not. You cannot think it afterwards, after the merger, to say that oh my god, you will not get the GST receivable. Yeah, that is not acceptable. Yeah. Then comes the valuation methodology. Yeah. Now again we are still in the pre-merger, in the sense pre-era. Yeah. Then we have to decide what is the valuation method that we can really look into, whether it has to be a market approach. Typically in a listed entity, that is the best method to have. Yeah. Or we can get into a DCF. Even private companies can do a market approach, because we have done that this in most of the times. And of course, this sense, DCF is the standard ones that we typically know. But before you do all those things, it is also important to look into your balance sheet of the company and see whether your section 56 is not hit, because you need to do a balance sheet valuation as per the income tax law. Now what does the actually what does the income tax law say? If you have to do a balance sheet valuation, yes, all the assets are as per balance sheet except your land, which needs to be valued basis your stamp duty valuation. Yeah, so you need to be very aware. If you have shares in that company of some other company, then that company's balance sheet value will also be needed. So you need to first look at your balance sheet value, see whether the balance sheet value is lesser than your DCF or your market approach. If that is so, then you can adopt the market approach, or otherwise you will have to pay tax on the balance sheet value. Another complication is land. Yeah. If you have land in your acquisition, or if you are having land in your merger or in your sale of assets, very important to notice that you have to have a stamp duty reckoner valuation. Yeah. And if your reckoner value is within 10% of your transaction value, you can pay tax on the transaction value. However, if it is more than the 10%, then you will end up paying taxes on the stamp duty. This is it will not be on the acquired value, but it will be on the stamp duty value. So that is another aspect you need to look into. Another very interesting situation that we have practically come across is sometimes what happens is, if you are selling if you are selling a slum sale, yeah, you do not know what is the land value, you go into a DCF working, you decide the DCF, and suddenly you realize, because the land value is with some other site service people, right, you do not have that idea. So you need to talk to the site service team to find out, I mean, for example, what is the value in Haryana? It could be that the land value is very high and it is much more than the DCF value. Yeah. So then this whole deal you will have to speak in some other language, it may not be that business deal. So that is also another aspect that you need to keep in mind. FEMA, now if it is a related party, FEMA is another very important aspect to keep in mind, because under FEMA regulations you need to know you just cannot get the money into the country just like that. Yeah. It is very important that there has to be an asset that is going out of the country to get the money in. If you do not get that, then you could have FEMA challenges as well. Then of course there are legal consideration. You need to decide on what is the most important thing. Means always talk of the effective date and the appointed date. Yeah. The appointed date is a date which is if all the conditions are met on the effective date, then you can choose a date which is convenient to you mostly from an accounting perspective. So you can have an appointed date which is earlier than the effective date, and that earlier date can be about 6 months ahead. We have not heard of situation where it is 1 year, 1.5 years ahead. Yeah. So that is something we need to look into. Legal agreements, NCLT means application, you need to have a close understanding of what goes into that agreement, because if you want to claim a deduction, or if you want to say that tax is not the driving force, it is something else, you need to put it in there, so that NCLT understands the principle. The sense it is I mean the principal activity is more relating to business rather than tax. Swap ratio is the most important thing, because when there is a merger, there are two shareholders coming together. Both the shareholders should feel happy about the merger, they should not feel short challenged, because in case of listed entity you have a very important condition of majority of minority shareholders who need to approve the merger. If they do not approve, you will not go ahead with the merger. So this is extremely important, and you need to have a very reasonable understandable swap ratio. Creditors consent is equally important. You also have a regulator's approval now, but that is more of a deemed approval. So, you can call the GST authorities, you can send the invitation to a GST authority because they are also termed as creditors under the company law. So, you will also inform the income tax authority, but if they do not respond back to you within 30 days, then it is as good as accepted by them. So, that is something nice. Also, if there is some land that is there, then you also need to take a 281 approval. Board audit committee is something that you need to get them to your way of thinking, very important, because board committees, if they feel that the minority interest is under jeopardy, then definitely they can put their foot down. So, it is very important to get them in. Accounting treatment of that is understood, yeah. FEMA consideration, which I have already mentioned. Related party transfer pricing, very important, because when even if there are agreements between two companies in a case where you do not need to get a sufficient compensation under the transfer price regulations, it is important to see, because supposing a third party company is acquiring the shares in a global deal. Yeah, let us take an example. There is a company in India, it wants to acquire a product from a global organization. Yeah. And the Indian organization is also having that product. There is an agreement between both the companies that if there is any product that is going out, just the product, then you will not be compensated. Assume compensation is not necessary from a company law angle, but that compensation will be needed from an Indian angle. In the sense say overseas entity may compensate, or the local purchaser will need to compensate under the deemed international transactions, because this will need to be reported under the transfer price regulation as a deemed international transaction. So, this is something you should not lose sight of. If it is a HR issue, then of course it becomes important to look at the social security, gratuity, policy of both the companies, leave policy. Is there any ESOP that is being paid? How do you treat that? Cultural fitment becomes very important, salary scale assessment becomes very important. So, that is the HR aspect that needs to be considered. IT setup, very important. What is the IT the sense actually landscape of the merging company with the merged company, will you be able to sort of work together, or do you have two different systems and then you need to report everything together, which is called a manual system or something like that, where you merge together. So, that also becomes important. Now, we are looking at, so this is the process of M&A, and now we are looking at post M&A. Okay, now you have done the M&A, you got an order, NCLT order, what are the things that you will consider? Yeah, GST preparedness is very important. Under the GST law, we have a NCLT order date, but there is also a ROC date, and we have, there is a GST circular which says that within 30 days of the ROC date, not the NCLT date, you need to sort of have the that is the effective date for them as far as GST is concerned, and any kind of cancellation of GST, you need to pay the GST and then you need to cancel it. All those cancellation will need to be done within 30 days of that, and then you need to look at the transfer of credit from the merged company to the merging company. Final returns need to be prepared. Yeah. If you want to add new premises, because the merging company has different premises as compared to yours, you will have to add on to that. Old POs need to be cancelled, so that you have a new PO, so that it is very important that you do not have a reduced ITC. All the ITC will come from the TRC rather than your form 2B, that is how it will work. Vendor customer communication will need to be made. Litigations has to be managed carefully. Yeah. Also, after that you also have to inform income tax authority, GST authority, customs people, bankers. You need to have a balance sheet certification by a chartered accountant, also intimate the creditors. Now, the last slide for you, basically just to say that very important that we do when we have an M&A is to have a very good housekeeping. So, we have a project in charge who manages the project and who is a communicating person to everyone. We track the project, we actually see what are the dates to be, which are the milestone dates, whether we have been able to achieve or not. We also are in close communication with our overseas team, because they need to understand the complexities of India, what are the challenges in India, what are the requirements in India, close coordination with them. Also, sometimes we have found that our overseas colleagues give us information only on a need basis. Yeah. So very important there is not to behave as if you don't need it, because if you don't ask, you don't get. That's how it is. Okay, world is like that. Very important is to ask for all the all the agreements. Ask for information. If you don't understand, please ask for complete information so that you are able to understand the entire landscape, and it is not just the India transaction that is in focus for you, and you don't understand the larger picture. Yeah. Of course, external help, of course, if you need, definitely you must take that. And also very important is to be in close coordination with the acquirer, or the acquirer will need to have a close coordination with the company which is merging with you, because what they think and what you think, there may be gap, and it is very, very important not to have that gap for a very successful merger. That's all, guys. Thank you very much.
Thank you, Priya ma'am, for the insights and the wonderful session. Can I have one?
Excuse me.
Oh, you have questions? Yeah.
I have one question on this. Yeah, it's a brief. Can you just share me your thought regarding the transfer of the credit, which we used to do in the merger by way of ITC 02?
Yes.
So can be doable in a once in the lifetime, or suppose if I do a demerger of any division, and I do an ITC 02 maybe 6 months down the line, probably I want to revise and I want to do one more ITC 02, would it be permissible? Because that's a practical difficulty, let me tell you. Because we did this demerger and we really found that some of the credit came later point of time, because you had time up to September.
I know. So which is why, very important also because once you surrender your registration, you cannot do anything. So
no,
you
I
will
am not surrendering the registration because it is in a demerger of my division.
Okay.
So my registration continue to be, it's a demerger.
Fine.
So this is a very important practical difficulty that industry is facing. So just wanted to know your thought onto this. Because legally, I believe there is no restrictions on the number of time, but practically department may ask that why you have revised this ITC 02. So just wanted to have your thoughts onto that. So if you can just.
Yeah. So see, we have always tried to ensure that ITC 02 is done just once, we don't want so many issues. We have not tried the scenario where we keep revising it, but one can always try, I would say. Yeah. Thank you. Yeah. Thank you.
Thank you, Priya ma'am.
Thank you.